introduce the guy who runs this most awesome page online, and his name is David Bechtold. You know, like the singer Beck? You know his song, Diamond Dogs? Probably you do, or whatever. If you don't, just remember, it's like singer Beck and then the word told, like I told you the story. Well, Bechtold, you got it, alright? Well, my name is Cleo, and I must say, heaven is a place on earth with you, Bechtold. Enjoy his page, and... oh God, Bechtold.
All right, enough of that. Welcome to the Short Vol Show. My name is David Lincoln, and that is my last name is Bechtold. That's where that little blip came from, but that's a little blast from the past. You know, it's funny when you first start out on YouTube, you try to add all this extra fluff and, you know, make these cool intros and all this other garbage, which is basically the calling card of someone who's just starting out, because if you see like a professional video on TV, you don't see all of these like weird transitions and fluff and flash and all that crazy stuff. So let's get right to it today. The VIX has made a precipitous down move in the last week or so. If we look at the chart here behind me, which I am in the way of as usual, you can see that's actually the year chart. So let's just break it down to a 20-day chart here. And you can see things really falling off in the last, 7 days. VIX peaking out around 15, a little over 15.5, and now down to about 1250. And correspondingly, if we're to look at TVIX, we're going to see that big sell-off. Same with UVXY and VXX. And so if you did manage to kind of short this on the little pop of the week before, then you're doing okay today, which is cool. Also, when we do look at the charts of the VIX term structure, that of the futures associated with the VIX, we see a big sort of drop off here with Contango almost to 9%. So let's take a look. I'm just trying to see. Okay, so Contango 9%. So what that means is the difference between the first and second month future is just under 9%. Now, why is that significant? That's significant because every day we rebalance. So the let's take UVXY, for example, buys a few of the futures of the second month and sells the first month future. So they're buying a cheaper future and buying a more expensive future, in this case the October futures for $14.71, and selling a cheaper future, the front month September futures for $13.50. And funds do this in different ways. Some of them have swap agreements. It's not like every day somebody from the fund is like, you know, they tell some clerk, all right, dude, you need to buy X amount of futures and you need to sell X amount of futures. They have ways of doing this that are more sophisticated, but in the end, they're trying to conform to a specific formula, and it's a very mechanical thing where they are changing one future for the other. Now, the significance of this is that as you change the whole time as this stuff is happening, these futures are slowly converging with spot, and typically spot is lower than the price of the futures, so the futures are sort of falling towards spot. So what I'm going to do is I'm going to pull up my little snipping tool here. If you're not familiar with the snipping tool, it's a great feature of Windows. Pull up my snipping tool here, and this allows me to kind of draw on this. So this whole area between spot and the futures is the potential to make money, an edge to the downside. So we have these futures falling all the time towards spot. And in a sense, the SEP future, there's less space to fall to spot than with the OCC future. So as we slowly move our money or our our investment in this fund towards October, we're creating more potential downside. And so as they rebalance the fund, you could think of it like each day, like this being a day here, the next day being here, and so on and so forth. As they rebalance the fund, you're creating more potential room for this to fall between the futures price and spot. Now, when I post fairly regularly, and I post this information on StockTwits regarding the state of Contango futures, and I've recently started posting a new data set, and what that is typically how many dollars and cents does Contango of whatever the Contango percentage is translate to in decay per month in UVXY or VXX. And the way I come to that figure is I'm just multiplying the Contango percentage by the current price of UVXY or VXX. So for example, right now with 8% Contango, which I'm a lefty, and here I am using my right hand with a mouse to write this. But if UVXY right now, for example, UVXY price is $7.93. So if I multiply 8% times $7.93, I'm going to get a certain number. And I'm going to do the math on the side here so that you don't have to watch me. So 8% times 7.93 equals 63. So that's 63 cents. So essentially what that means is that every month, if the VIX were to stay just kind of right where it is, roughly, and this is a very rough figure, UVXY would lose 63 cents. And the reason I do that is, like I said, this is a very rough figure. It represents basically the VIX staying pretty much still, the term structure being kind of locked where it is, and none of those things are going to occur exactly that way. However, it does give you a rough figure if you're wondering, well, how much is Contango affecting UVXY? Is it affecting it by $1 a month, $2 a month, $1 a year? This gives you a rough idea. If you see 63 cents, then you say, oh, okay, well, all things being equal, UVXY is going to go down about $0.50 a month, a little bit more than $0.50 maybe. Now, if you take that 63 cents and you divide that by 30 days in a month, you're going to see that per day, this thing is not going down very much at all. So 63 divided by, let's say there's 30 days in an average month. So that's only 2 cents a day. So when you're talking about, now 8% Contango is kind of a higher level from what we've seen in recent times, that being this year. 8% is a pretty high level, but it only represents 3 cents a day that UVXY is going down. Okay, so that it kind of gives you a little bit of a perspective. However, when you're calculating in your mind maybe a put spread, or you're trying to just get a rough estimate of, okay, well, if I'm looking at an option 6 months out, and I know that this thing's declining by, let's say, 60 cents a month, if I'm looking 6 months out, then I can kind of estimate, where this thing could be in 6 months, how much lower it could be. Now, on top of that, for trading, we have the VIX, and if you look at the VIX here, this is going to have a much more immediate effect on the price of a UVXY or a VXX. And you see that the VIX kind of gyrates up and down, back and forth, back and forth. And if you follow it closely, you can kind of get into the swing of things. You could maybe, kind of sell it once it gets at a higher price here, or once it gets down to like 11, you could maybe cover your short, get flat. Some people might even get long it. I don't myself get long it, but you can kind of trade within this range. And as you can see, all things aren't equal. The VIX doesn't stay at a specific price all the time. However, that number gives you just a brief shorthand. And once again, if you want to calculate Contango, all you're going to do is you're going to take the second month future, subtract the first month future from that, and divide that number by the price of the first month future. And if you want to figure out roughly how much value, and I like to call it either value lost or decay, rough decay in one of these issues due to Contango, what you're going to do is you're just going to multiply the percent Contango by the current price of the underlying ETP. So in this case, just roughly VXX is around 30, UVXY is around 8. If you multiply that by the current Contango, it's going to give you a rough estimate of how much these things are going to decay over a month's time. So in VXX's case, it's somewhere around $2, and UVXY is somewhere around 50 cents right now. So that gives you just a brief explanation of what I was doing there. Let's dig a little deeper now into current trading in VXX and what I'm doing and what I'm seeing. Okay, so if I pull up VXX chart here, so I did put a time spread on. I did put a put vertical on, getting me short deltas in VXX versus 30.5 price in the underlying. So if we bring a 10-day chart up here, somewhere around here when this is trading around 30.5, I did buy a November 30.27 put vertical. Let me start over. When this ETP was trading about 30.5, I sold a call spread. I sold the 27.30 call spread in November for $1.22. Now, selling a call spread is the same thing as buying a put spread. It's just the inverse. So if I sold a call spread for $1.22, it's a $3 call spread. All right, so $3 minus $1.22, that would be the same thing as buying the put spread for $2.88. So selling a call spread, let's just make it real simple math. If it's $3 between the strikes, if I sell a call spread for $1, it's like buying the put spread for $2. You're just going to take the distance between the strikes and subtract the premium for the call spread, and that will give you the synthetic of the put spread on the other side. Call spreads and put spreads are related. Now, there are some caveats there, but they are related. And I picked my strike selection. Let me discuss why I picked the November 27.30 call vertical. Doing some simple math, I figured that VXX is down about $2 a month due to Contango, with Contango at current levels. So I figured if I went a little bit over 2 months out, that would result in about $4 in decay due to Contango. Also, we were kind of in a vol pop, so I figured if I could get $4 of movement due to Contango plus a little bit of a kicker of the VIX going down slightly or staying where it was, if the VIX stays exactly where it was, then I figured VXX would be down $4. But since I entered the trade during a VIX pop, if the VIX actually went lower, then that was even more edge in my favor for this to be a favorable trade. So I figured with VXX around 30.5 and Contango around 7%, that meant that all things being equal, VXX would be 30.5 minus 4, which would be 26.5 in 2 months. I gave myself a little over 2 months with the November options. Right now, November expiration is 64 days out, so just over 2 months. This was a week ago that I put the trade on. And so I gave myself sort of a conservative, I don't know, some people would say aggressive, but the 30-27 call spread I sold. So you make a maximum profit if VXX is below 27 on expiration. And since then, it's worked out well. Where VXX is now 27.98. So it's a buck over its target in 2 months. The call spread, which I sold for $1.22, is currently worth about 94 cents. That's what, like, if I look at it mid-market, that's what it says. Indeed, if you sell the 27.30 call spread for $1, then your break even is 27 plus $1 at $28. So hanging out right around break even in the price of VXX right now. Now, many people, as I mentioned before, like to kind of sort of trade the VIX movement back and forth. And so when things go lower, once again, if we look at the VIX here and we back it out a little bit, let me just make sure I'm not blocking this thing again, and we back it out a little bit, you can see that we're in an average spot here, but down another point or two will be at a spot where it's kind of the recent low. So 1257 is low to average, but if we can get down to like below 12, that's a spot where the VIX has sort of bounced off of in recent memory. So for me, I kind of got short with the VIX around 15. Now, as it gets to a little bit lower, if it does get down to 12 or 11 and a half, I would consider flattening out my short and actually even getting long via maybe selling out of the money puts. And indeed, this morning I started to sell some out of the money puts in VXX. And what I did was I sold a put spread, which basically making the bet that VXX will not make it all the way down past 26.5 in the next 15 days. So I went ahead and I sold this put spread, and it was the 28th September, and this is my example account, so everything's pretty small, very small here. But I picked a put spread that I don't think that's sort of out of the money, and I don't think that VXX will really get to by expiration. And that was the 28 September 26.5, 24.5 put spread, and I sold that put spread. And the price that I sold it for, let's take a look here. Was 45 cents. So as we get to a spot where that is a recent low in the VIX, I'm looking to either take my short off or sell something against my short to flatten out somehow, and try to kind of trade it on both ways. So, one strategy would be to just sell this call spread on a pop and just leave it to expiration. But what I'm doing also is I'm selling some puts. I'm selling a put spread, but it's essentially selling some puts with the VIX approaching its lows again to A, hedge the call spread I sold, but B, create an additional amount of income. Now, we want to remember, very important, that UVXY is going to undergo a 4-for-1 reverse split on September 18th. So that's coming up. That's in 5 days. So I would be reticent to make any big options trades in UVXY in the next week, because what happens is after the split, there will be new strikes, and the new strikes will be the ones that trade, and the old strikes will become fairly illiquid. So I'm very much looking forward to the reopening of UVXY post split, and I'm waiting to enter any trades in UVXY until after that happens. Now, I prefer UVXY to VXX, and I'll tell you why. Because there is an additional decay component with UVXY due to the fact that it's leverage. It's 1.5 times leverage. Now, that's not nearly as great as when it was 2 times leverage, but with 1.5 times leverage, you can get some what we call beta drift type decay. And Michael Listman's always a great guy to talk about beta drift with. But just by means of example, if we take a look at TVIX here over the past year, you can see that TVIX took out the low of 2018 a while ago. Whereas if we look at VXX still hasn't taken out the low of the very beginning of 2018 of 25.59, and this is due to the leverage component and the slippage due to having to rebalance a leveraged fund. And this is a widely covered topic online. You'll see it with 3 times leveraged funds, DGAS, UGAS, many of the gold miners funds. And thus, I would prefer to be trading UVXY, but I didn't like UVXY at such a low price of just around $8 because it just didn't provide the options opportunities that a higher price issue would. So I've been anticipating the split in UVXY for some time now, so I'm very excited for that to be happening soon. I want to thank everybody from Patreon. I haven't been online for a live stream in a little bit, so I'm happy to be back here with everybody. I want to thank people who've supported me on Patreon. It's a huge thing for me, and I just type Patreon. It's a huge thing for me. I know it's not a big deal for somebody to give $5, but to me it's huge because it's helping me to expand this channel and become independent. I have a couple side jobs. I make money trading, but I just started trading again recently, and I'm just building up my stake. Anything that I make trading, I've just been using to build up my the amount of money I'm managing. And so any way that you can help out to support this channel would be great. I really appreciate all the support I've gotten on Patreon recently. Patreon's great because it really cuts out the middleman. I have a sponsor who's awesome. My sponsor is Gorilla Trades, and Ken Berman, who is the quote-unquote gorilla from Gorilla Trades, is excellent at picking stocks, and I didn't know that much about him when I became sponsored by him, but since then I've learned more about them, and they've have some great picks. So I'm really proud to be sponsored by them because they have a great product. So check them out, Gorilla Trades, link in the description. But meanwhile, Patreon is an amazing thing, and what it is it allows people to support me directly and support the channel directly. You can help support independent media, and I guarantee that every penny from that is going towards things like internet fees and things to support the channel. I would like to get together a rig so that I can go on the road to interview people and go to some of these conferences about the VIX and whatnot. I would like to even just travel to the SIBO in Chicago to interview some people there. But, funding's been tight for this channel. It's been on a shoestring. I don't have that many viewers yet. It's a niche market, and so it's not like millions of people are going to be tuning in to watch the VIX. So I desperately need your support. I want to thank those who have supported me because it's amazing to get support from people. And so thank you to all those who have supported me on Patreon in the past. And thank you ahead of time if you're considering it. I have gotten some new people this month that I'm grateful for. I do want to quickly read off some names of people who've really helped me out. I've got Abraham, Brent, Brian, Dave, Dave 2, Jane, Kevin, Mark, Mike, Seth. Thank you for your support. I really appreciate you, and it's huge for me that you've taken the time to go and support me. So thank you. I really, really appreciate it. In the meantime, enough of that. The new series that I've been working on, Trader Talk, is a series of videos that are much more brief, 5 to 10 minutes long, and they cover one specific topic in either macroeconomics or trading. And the hope with those videos is to bring this channel to a bigger audience of maybe people who aren't necessarily traders or who are just learning about trading. And I'm trying to get as many guests as I can to participate in these videos, and I think you're going to find them to be pretty fun and amusing. You know, YouTube is the kind of thing where you have 15 seconds to grab someone's attention, and if you don't grab it, then they're gone forever a lot of times. Now, if you're watching this now, then I know that you're probably into trading and are interested in this stuff specifically. Those really short videos are probably not focused on you. It's focused on somebody who's just getting started and just learning these concepts. So, but it's a way to expand the channel, which is an exciting thing for me. All right, so let's see where we stand right now. E-mini's up 11, Dow up 103, NASDAQ up 74. Now, why did I say this George Costanza thing in the title? Well, I want to explain that to you. A lot of times, doing the opposite of what the public is doing is how to make money in the markets. And I believe that most retail and the public right now is A, thinking that volatility is going to explode coming into midterms, and B, getting on the marijuana stock bandwagon. And these are two things that I think I'm fading. And why I say it's the George Costanza thing is from that famous Seinfeld episode where George says every one of his instincts is wrong, and so he's going to do the opposite. Well, in a way that sometimes works in trading. For example, I remember going to fill my car up and being at a gas station and somebody telling me in another car next to me, oh, well, oil is going to be going up over the next year, and so gas prices will be higher. And I remember thinking to myself, you know, if traders knew exactly what was going to happen in the next year, then everybody in the world would have bought oil futures, and then everybody would sell them later on. And things don't really work that way. The market is not separated from the participants. It's created by the participants. So, but there are certain times when people seem to think they know what's going to happen in the future, and generally, if it's somebody in public who doesn't follow the markets very closely, I just think of it as the man on the street. If the man on the street says, you know, buy Amazon, then you probably might want to fade that. And in a lot of cases that happens. I try to take the pulse of quote unquote regular people who aren't in the trading industry as much as possible, because you can use that as an indicator. And if you track that yourself, you'll see how you can use that as an indicator. But it can be a good way to indicate how the general public is feeling about something. And as I just mentioned before, these MJ stocks have had a huge run up, and I would be very careful with them right about now, because CGC, APHQ, Afria, Aurora, and Canopy Growth have had a big run, and the excitement is starting to fade a little bit, and we could see some serious pullbacks. Tilray, TLRY. Let's take a look at Tilray, up 10 today, and I think people are you know, the first thing I would say is be very careful about shorting anything of this nature. I think some of this run up is due to people shorting it and then being forced to cover. But secondarily, if you're going to jump in on this, be very careful, because a stock graph can't go straight up like that forever. It just can't. And it's just the reality of it. So if you're going to jump in and play, be very careful. And in the meantime, a lot of people are saying that the current bull market is in the late stages and to be careful. And I don't know if that's true or not. We'll have to wait and see. The only time we'll be able to tell that is sometime farther in the future. So there's where we stand right now. I'm happy to be back here, happy to talk to everybody, and I've been busy with side jobs and stuff like that, but look forward to some great new interviews coming out next week. And thank you for watching today, the Short Vol Show, and I will be on the air probably tomorrow as well. And we'll see what happens in the market. Exciting time for the short vol trade. If you did get short on that little pop, then you're doing well today, and it's always great to make a little money. And congratulations if you did make a little money. So right now, though, I'm looking to pare down my short a little bit or sell something against it, because vol is moving into a lower range. I wouldn't necessarily be looking to initiate a short right here, but if you are short, Contango is pretty steep right now, approaching 9%, and we could see more follow through to the downside here. I wouldn't be surprised at all if we see if we take out that $25 low in VXX soon. So thanks for watching once again, and I will see you in the next one.